Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I have with me my good friend and coworker, Tonja Wortham. Tonja, welcome to Market Shares.
Thank you, Tony. It's great to be here.
This is your second time on Market Shares.
It is. You've upped your game a bit.
Well, I figured you were in town from Tennessee, and we had to have you in the studio and chat a little bit about what's going on in real estate and mortgage. And let's talk a little bit about your background so people know. You work for us here at New American Funding in business development and talent acquisition and all those, and really a multitude of hats that you wear. But you also have a long history and background in the real estate industry.
I do. I've gone back and forth. It's given me an interesting insight into how the mortgage industry can run and how the real estate agent can run by partnering together. They really are two industries that should work in tandem. I think that sometimes that's an opportunity that can be lost in the shuffle. And at New American Funding here, I'm excited because we've been involved in a lot of, I think, creative and helpful ways to help real estate agents build their business.
Yeah. Well, I think it's more evident than ever. Those of us that are in the mortgage business, and really if you're in real estate as well, there's been no shortage of, let's say, opportunities or, it's pretty well known that every real estate company out there is looking for some ways of participating in really all of the different verticals that surround the real estate transaction, but mortgage being, a large piece of that. And as, profits and margins have gone down in, frankly, all of these industries due to, the market, right? There's less transactions, but also technology and competition has driven down prices and margins and, discount brokerages and all sorts of things that have kind of led to the situation we're in now. I think that the real estate industry is like, how do we participate in the mortgage transaction in a meaningful way? And the reality is there's lots of different ways to do that. There's some traditional ways like joint ventures, that were very popular for a long time. We're going to talk a little bit about that. But then there's other kind of more creative ways. Even down to the individual real estate agent that wants to also just be a loan officer, right? This dual agent situation where it's something that we support here at New American, but it's something that's happening all across the industry. And I don't know, we can debate whether or not that's the right thing to do. I personally feel like, I've never been a realtor, but I know that doing mortgages is a full-time job. So doing both can be difficult, but if you're not doing enough transactions and you're looking to supplement your income, maybe for some people that is a good option. But then you also have your more traditional ASAs. You've helped us set up a number and manage a number of different ASAs and relationships. And I feel like even that has accelerated recently where, people have maybe had successful arrangements in the past. Maybe, they let those go. And now they're kind of like, hey, we need to get a little additional revenue coming in. What are some compliant ways that we can set things up? We're also seeing kind of like what Keller Mortgage does, but I'm seeing multiple mortgage companies. And, we're looking at this too is, ways of partnering in a, not a full joint venture, but working with owners, managers, team leaders of real estate offices in more of a management role in the mortgage industry. So just lots of different things happening out there. And then you layer on top of all of that, some of the big moves that have been made recently. Keller Williams just got acquired. I don't know all the details, but, a venture capital firm bought, I think, the majority or a large stake in Keller Williams. Maybe, I don't know if you have any details on that. And then obviously we had, Rocket, who had previously purchased Bay Equity, but now, purchasing Redfin, which is a huge move. And then on top of that, they also turned around and purchased Mr. Cooper, which is a huge mortgage servicer. And so you kind of have this situation where Rocket's like, we want a piece of every part of the transaction. So I guess it's not just the real estate agents that want a piece. In some cases, it's the mortgage entities saying, hey, we want to get a piece of the real estate action, right? So it just feels like there's a lot of consolidation and pressure squeezing all of this into kind of one central place in which you can obtain your financing, your mortgage, maybe even your insurance and all the other things, your title and all the other things that you might need. So it's an interesting landscape, to say the least.
Yeah, there are companies out there that they're trying to fill that wheel, and they want to have all those services. Whether that's going to actually work or not is really up to the real estate agents that work in those brokerages, because that is one of the challenges of an ASA, a JV, or any sort of in-house service where they're promoting, the partnership is getting the agents to actually use it, because you can't force them to do that. Now, the Rocket Redfin, now Mr. Cooper situation there is a little bit different, because Rocket is, a online web-based technology call center type mortgage company, and Redfin is not a traditional real estate company, and and so they're going to have the servicing aspect. They're always going to capture a percentage of the business, and so they're over here. If they can get 5% market share, there's still 95% left,
right?
And really at the end of the day, that is the lion's share of the business that's happening. And even to this day, with all the technology that we have, and we have a lot, it always does come down to the relationship between the realtor and the mortgage company, and that referral. And real estate agents, I think, now still do command the upper hand when it comes to those referrals. So having a traditional model, as well as the ability to have the technology, the servicing, I think is really something that most mortgage companies have learned the hard way over the past few years in the market, that not having that servicing, they've suffered or just been eliminated.
Gone away.
Away, yeah.
Yeah.
You don't hear about that on the news, but for those of us that live in this world, there's a lot of companies that have gone under.
Yeah, I mean, servicing, for those companies that have larger servicing portfolios, there's no question in the last 3 years that the revenue from that has allowed them to, I would argue, remain very competitive in the retail space, because that's really what it does. I mean, you could run at a deficit in your retail division, bringing in additional revenue from your servicing, and then at the end of the day, you're still a profitable organization. And so what that has done is it's put the squeeze on margins. But all of these things, as I think about all of these different arrangements, to me, they all feel like they're just continuing to put the squeeze on the margin. Because if you think about the Rocket situation, I mean, if they can control the mortgage, maybe they can make less on the mortgage. Redfin, we already know, makes less. Well, that's why Redfin had to sell. I mean, they're just not a profitable organization.
Redfin makes less, and the Rocket mortgage loan officers are, a non-traditional loan officer, and they make less, a lot less. Yeah.
Right. So, if you think about that, and then you roll all that into one transaction, it does make, from a pricing perspective, a more competitive arrangement, perhaps. And I think you're right. Look, the traditional, this is a relationship business. I've been saying that for 30 years. That's the way that I understood it. And the reality is that, I think that's proven day in and day out by those very successful mortgage and real estate professionals who do have relationships with their clients, with their referral partners, et cetera. The reality is even in a difficult market, people with great relationships still do a lot of business. And so the proof's in the pudding as far as I'm concerned. But I think what I get concerned about is, it does put pressure on corporate profits and margins. Loan officer compensation gets squeezed. Everything gets squeezed just a little bit, which is no fun for anybody when we're in a market with inflation and costs going up. And yet now we're realizing that in order to make the same amount of money we're used to, we have to do a lot more transactions.
Right. So 71% of real estate agents, according to Inman, of active real estate agents, did not close a home sale in 2024.
Well, that doesn't sound like very active real estate agents, does it?
It's just a reality of the industry. There's always going to be it's like the 30-30-30, right? Then you have your top 10%. That's a pretty big number in comparison to other years with real estate. And what that tells you is that there's going to be a lot more real estate agents who aren't going to renew their license, and they're going to get out of the business. What does that mean for us on the mortgage side? And what does that mean for real estate agents and real estate companies? right? They're gonna need us to partner with them even more in the aspects of ASAs and services that we offer. It's not just partnering with us on the mortgage side and the great products that we have. We have a product for everybody, right? 2,400 products or something. It's probably
Right.
more than that today. That was 2 weeks ago. So they want all those opportunities, because when you finally get that buyer, you really want to do everything you can to make sure that actually turns into a closing,
Yeah.
right? And so having knowing each other, knowing the knowledge of how it is that we work, and being able to trust, in that relationship is really important. But from a business standpoint, on the real estate side, this is a profit center for them, and those are partnerships that ASAs and desk rentals and MSAs and things like that is some money that gets put into their bottom line and allows them to keep going. The margins are being compressed on the mortgage side. They've always been compressed on the real estate side. Most real estate models are capping models. So the real estate
Right.
agent pays a percentage of their commission to a certain amount, and then that's all you get.
Right.
So they have to do as much as they can with limited funds.
Well, and with 71% of real estate agents not closing any transactions, I'm sure there's another good percentage that did very few. What that means is you have a small handful, or I'm sure it's still a lot of people, but my point is you have a very small segment of the real estate population that would be hitting those caps. Right. So now you have large teams doing lots of production. You have if you own a real estate office, you only have a couple of the people hitting cap, and the rest of your people not really bringing any revenue into the market center. Right. And so it's not just a margin squeeze. It's because of all this consolidation into a handful of the top producers. That too impacts the economics of a real estate branch.
Right.
I would have to assume.
Yeah. So what's happening is there's some cottage industries that are branching off. And, one of those that I'm excited about on the real estate side, because I love the real estate industry. I've worked in that industry for many years, was a real estate agent. And it's really fun when you're working with somebody that's new or newer, and you're teaching them. And, it's the same thing in the mortgage industry, but there's a lot on the mortgage side of training and things like that. So productivity coaching is something that's really taking off, and there's some models out there that are being implemented, and they're going out and finding those experienced agents and saying, hey, do you want to be a productivity coach? Follow our model. They have dashboards. They have, all the bells and whistles. And I feel like this is really a wave of the future. Now, it might feel like something that is going back in time, right? Having a person teaching another person. Right? Because you think, oh, can't I watch a YouTube video or watch, a video? But even some of the companies that they don't have brick and mortars and they're more online companies, the training that they have a lot of times is live, right? It's people teaching
Right.
people. So this productivity coaching model, a friend of mine is a Keller Williams agent, and she's doing it now. And we were talking about it this morning, and I just think that it's something that on the mortgage side we need to get involved in. We need to understand what's happening there, because they're taking agents and they're actually following them for a year and coaching them and training them. And the idea is that when you get in the industry, that you close at least 6 transactions in your first year, which doesn't sound like much, but there are so many people that get into the real estate industry and they just throw them out in the middle of the lake.
Right.
And it's like, if you can swim back, great. But even if you can figure that out, you still don't necessarily know what you're doing. And so how are you going to build your business if you don't really understand your business or how to do it? And part of that process is learning about how to work with a loan officer, how to find a loan officer, and the kind of services that they can offer. So, there's if a real estate agent partners with a loan officer in our company, we'll darn near do everything for them. And there's a lot of value there for a real estate agent. And I think a lot of other companies are like that as well.
Sure.
And so, of course, we have all the technology in the world, and we have, the app that keeps them informed, that gives them a reason to call their clients. All that kind of stuff is important. But that relationship, I think, is what's most important. And I know that the people that work here in our company and in our offices that I talk to, they want to always grow their business, but how do you do that if you're not constantly learning and doing new things and doing more business? And so how do you do that? The way that you go from doing 1 loan a month to doing 2 loans a month is that you partner with another real estate agent that does 1 transaction a month and refers that to you. Now you've just doubled your business, right? And then you can go out and partner with them and offer value to many people. And then those real estate agents are also, able to give great service and do things in their business that maybe they weren't able to afford to do before because they had to pay for it themselves. So it's like this really beautiful kind of cooperative, synergistic relationship when done right.
Right. So this productivity coach, this is really kind of, it's like a mentor, right? It's like a mentorship program where they're kind of taking this person under their wing, like almost as a junior in a way. Is that, am I understanding this right?
There's experienced agents as well that are signing up for it.
Okay.
They're not reaching their goals. So the people that are the great candidates to be a productivity coach are, of course, people that love teaching other people and are patient with that. So the idea isn't that you're doing everything for them. There's one-on-ones, there's a system, there's a dashboard, there's trainings and things that they can do. So for example, and then there's also figuring out what's lift for you, right? I've always coached too, if you're doing something and it's drag, don't do it. There's plenty of things that you can do. And if it's drag, you're going to stop doing it. You're going to find reasons to avoid that pain.
Right.
So if somebody really loves open houses, for example, a simple example, but what do open houses do?
Generate leads, hopefully.
They generate leads. People that walk through the door on Sunday, at 1:00 in the afternoon are probably looking to buy a house.
Right.
At some point. And so there's a whole system in there. So a brand new agent or somebody that hasn't done them before can go in and get this, very complete system on how to do an open house, what to say, how to run it, and all that. And so the idea is that the coach is not doing the open house or even telling them how to do it. What they're doing is coaching them to do it at all, holding them accountable, talking about, what worked, what didn't work, and then what to do next.
Yeah.
Yeah.
Well, I think that learning through someone else's experience is huge,
Mm-hmm.
and I think a lot of people hire coaches, but so many coaches in many circumstances are people that used to do the thing, right? So
Yeah.
I did it, I've arrived here, and now I don't do it anymore, and now I'm a coach. You're talking about active agents working with active agents, right? And kind of mentoring
In some
them.
respects, yeah.
Yeah.
Anyone could do it, though. You don't have to have been an active agent. I think that with the system, it allows people that maybe are really great trainers and were good at systems, but weren't great at attracting leads, right? If in the real estate industry, if you can go out and collect people that want to buy or list a home, you're going to be successful.
Yeah.
Because there's a whole bunch of other people that'll do everything else for you if you can hire, a team and transaction coordinators. But most people don't get to that point.
Well, and is the model that you're not necessarily paying for this upfront, but you're paying through like shared commissions or something like that?
It's a percentage of for every deal. So the productivity coach themselves have skin in the game.
Right.
Yeah.
Well, and the reality is that, I like models like that because now as a coach, I have a vested interest in your success, not just you writing me a check every month,
Yeah, and I've had plenty of coaches in my day that, they just had we just chatted for an hour, and I wrote that check every month.
Right.
And someone that brings systems to the table, I think is the wave of the future in coaching and productivity coaching. Life coaching and business coaching and all that is important if that's the direction you want to go in. But if you're a new real estate agent and you're not closing, if you're not making a couple $100,000 a year, you should probably just focus on productivity.
Yeah, 100%. No, I love that. Well, I want to ask you about, you do a lot of business development and recruiting. I'm just curious what you talk to a lot of loan officers and a lot that are considering making a move. Some might come, here, some might go to other companies, some might choose to stay where they're at. Anything you can share about kind of the current state of the people that you're talking to? 3 years of a very difficult market. A lot of people, have frustrations sometimes, rightfully or unrightfully so. They look at their company they're with right now and say, I could do better. somewhere else. And the reality is that some companies are struggling, and so they've pulled back resources, they've pulled back support, so on and so forth. I'm curious, what do you see is the main contributor that has people considering making a move right now, if there's anything that comes to mind?
Yeah, I think it's like what has been is, the analogy of the frog in the pot of boiling water.
Right.
Is that as the market has, it has been difficult for everyone. Nobody got off scot-free in this market. The companies that were set up with alternative streams of revenue, like call centers, servicing portfolios, and retail, are the ones that also didn't have to lay off their core talent.
Right.
So that is, I think, the slow burn of, if you have unrealized expectation breeds resentment and discontent. And so when somebody has a certain level of operations support, for example, and this is, I just had a call this morning with a gal, and everything was going great for years, and then all of a sudden they had to start making cuts, and so she has a smaller branch in more of a rural market, so they cut her people because they had these bigger branches in the bigger cities that they wanted, more people. And I said, well, that's just a business decision. She took it really personally because she was a good producer. And she's like, well, why are they taking my people away? And it's like, because they have to take somebody away.
Right.
And they chose your people.
Yeah.
And, the fact is that I know just because we're friends and we've had conversations about it, I hope that's okay, about, the difficult decisions that you've had to make as a leader.
Yeah.
And really, kind of taking the hit yourself and allowing New American Funding in our region. You run an entire division now, so probably the whole division. I can only speak to our region. I know that you have retained our talent despite the difficulty that was causing in the moment. And then I listened to an interview the other day that Patty Arvelo was doing, and she was talking about business development and people and how important people are at New American Funding. And that really is true here, people first.
Yeah.
And she was saying that her and Rick and Christy understand that letting go of somebody that is, loyal to the company, that's really the best at their job, that's connected to our loan officers and everyone, is something that cuts very deep. And once they're gone, right? And so when the market gets busy, you have to go out, and now you have to hire new people to come in.
Yeah.
So a lot of companies had to make these decisions and cut pretty deep because they weren't going to survive otherwise. And she said, look, we can bite the bullet and take the hit for months, because once interest rates drop, if they go down 1%, 1 million people flood the market.
Right.
We're going to make that up in a couple months.
Right.
So so very, very carefully, I know you are an expert on P&Ls and things like that, and just being able to take the approach of a business as well as thinking about the people, I think is really important. And that's the thing that I think is the biggest thing going on in the market, is that the pain from those decisions is starting to hit.
Yeah. Well, I mean, we've ran an overstaffed model, I would say, for the whole, I've been here for 11 years almost, and we've always been a little bit overstaffed because we're a growth organization, right? So you can't really say, hey, we're looking to add a bunch of production and people and then not have the staff to support them. So luckily, we've kind of been in that mindset for a long time. It allows us to run overstaffed. I mean, look, the reality is even I've had to, like you said, make tough decisions. You need to right size your organization, but right sizing for us means right sizing down to still an overstaffed model. It's not cutting down to the bone. And Patty's right. Not only can we bite the bullet, financially, if we need to, we're prepared to do that in certain markets because of the servicing and the other things that we have available, and really other efficiencies that we've created within the organization. But, there's two things that come to mind. One, you can't say that, we're a family and then just be willing to part ways with the people in your family just at a moment's notice because all of a sudden the numbers are off. To me, that's very disingenuous. And yes, you do have to make tough decisions. You do have to right size your organization, but those come after a lot of thought, and really, usually delays. And, it's just not something that we like to do. But the other side of it is exactly what you said, that as the market returns, and look, let's be honest, everyone projected rates were going to improve in 2024, and that didn't happen. We're probably still very similarly staffed to when we were anticipating that. And so we've been biting the bullet for a long time. But I do think that day will come. And when it does, we will benefit so greatly from keeping those people in place and being able to deal with the volume, because one of the biggest challenges that happens when interest rates drop suddenly or some other event happens in the market that brings in a lot of business is capacity. You go from going, I wish we just had more loans, to, oh my God, how am I going to get all these loans done? I mean, welcome to the roller coaster that is the mortgage business. And so we do feel like being prepared for that is a huge advantage when the time comes. It is interesting too that this market does give people the opportunity, though, to make moves. I'm sure, as someone who works on bringing people to the organization, look, when people don't have huge pipelines and they're in financial challenges, at least the opportunities there for a conversation that might not otherwise be.
We've worked really hard over the past 3 years, I would say, in tandem with many other leaders in the company, Tim Cotton, namely, in really getting our transition plans and our concierge services and everything dialed in. So I would say that even, a big producer, we can transition them over, and there's a way to do that makes sometimes their business increase when they make the move.
Right.
So somebody that's not doing very many loans, it's easy to move them.
Yeah.
It's those mid-level and higher producers that really challenge a system. And I know, like, we just brought one over this week, $100 million producer, and onboarding a $100 million producer is much different than onboarding, a $10 million producer.
Sure.
They're moving really fast, and there's a lot of irons in the fire there, and we're handling it really well. I'm really proud of our concierge and our transition team. They're class acts. So, yeah.
Well, I think any company, and I would not argue that New American is the only one that has put a focus on, how to transition loan officers onto their team. I mean, but I think if you're going to have a strategy to grow and recruit people to your company, you better be prepared to make sure they have a great experience. 100%. And it's super important. What are the other things? Is there anything else that comes to mind that loan officers seem to be looking for that they're not getting right now? That I'm just kind of curious. I don't want to make this about recruiting per se, but we have a lot of loan officers that watch this. I'm just curious, what is it out there that you hear, are frustrations for loan officers?
Well, limited loan program offerings and overlays and things like that.
Yeah.
So, a majority of what we do here is in-house, but we do have 2,400 products, and we have the broker and the in-house, but we also have very robust non-QM. We have OTC. We have so many unique programs, and then our in-house pathway is really catching fire and getting some traction. And so talking to loan officers out there who are having difficulty getting these programs. And another thing that I heard just today that's happening, and I heard it twice from two separate people at different companies, is that their companies are limiting the amount of certain loans that they can do. Yeah, so bond loans, things like that. So they're just saying, like, you can only do 2 a month.
Right.
And after that, you can't do any more. And so there's the business model, and then making changes in the mortgage industry that affect a loan officer is something that you should be very careful of.
Yeah, excuse me.
And I think a lot of times changes are made and they're not explained why.
Yeah.
You're really good about that. You get,
Well,
despite,
we're all guilty of making decisions that we didn't communicate well enough. There's no doubt. But yeah, I mean, it's something you learn through experience.
yeah, you may have taken some lumps and
yeah.
learned the hard way, but
Yeah.
we've worked together for many years, and I think that you've been in leadership for a long time, so you probably learned a lot of lessons working at a smaller company that coming over here, you already knew.
Yeah.
So that's a benefit of starting, in the mortgage industry when you're 12 years old.
Yeah.
Right?
Well, I mean, it is difficult, and I would say that this is something that I've, I still fumble the ball on occasion, is that you spend so much time, whether it be as an executive team or just, on your own, thinking about a potential change, and you forget that, no one else was involved in that conversation. And so to me, it's like, this has been so well vetted out in my own head, but then you don't do a great job of communicating it, and it can be a nightmare. And I've really tried to be better at that. But it is something you have to be conscious of, because in your head, you're like, this has already been thought through. Like, it's going to be fine. I thought of every angle. And it's like, yeah, but you didn't tell anybody about it,
Yeah.
So that's something that we try to do. And yeah, companies that make those sorts of announcements, changes, without doing that, it's something that really can frustrate loan officers.
Yeah.
And look, the reality is right now that you mentioned the products and the programs. I mean, this is something that we've absolutely put a big focus on. The companies that are doing really, really well right now are the ones that are willing to add every single product. And look, from an efficiency perspective, it's not great. I'm going to be honest with you. It's difficult to train your loan officers and set up your software, whether it's Encompass or whatever. There's new disclosures, there's different forms, there's all these different things that need to be set up to roll out a new product or program. But the reality is that with business so scarce out there, and the business that is available and many times is unique, like, you have to have a home for every loan,
You have to have a home for every loan.
and
And you have to be able to capture as many loans as possible.
100%.
You have to have a really big net.
Yeah, you don't want to say no. You do not want to say no to a real estate agent who says, hey, I got a referral for you finally. And then you're like, I'm sorry, I don't do that.
Yeah.
But maybe the guy down the street can do it like that. We don't want you in that position. And we used to have a different mindset about this, because we looked at this and said, look, it's so much work to roll out a new program, and no one's going to use it. And there's many programs we have that I bet very few people use them, but it's those couple that get used.
Yeah.
And we've shifted our mindset on this over time and said, you know what, we're just going to add, if it's out there and it's legal and it's compliant and we can do it, and then we're gonna put it on our list. It may not come immediately, but we're gonna do it, and I think this really helped us.
Do you think that AI is really going to play a part in allowing people to use more of those programs? Because I see that in the near future, the world's going to look a lot different, including the mortgage industry. And I think that one of the changes that we're going to see is that if somebody inputs, the information on their client, and AI gives you all the options in the loan programs that we have, and then tells you, and you can do any of these, but if you improve their credit score 5 points or something, they could also do this, and it tells you the best loan scenario, because there's only so much time in the day, and we're always rolling out new programs, but do people really stop and utilize them?
We get hundreds of locks a month that come in on a program where it's like, did you know we have this program you could have locked that on, because the rate's a lot better and there's less documentation or whatever the case may be. Yeah, there's no question. And AI is already starting to do that. We have a huge AI project that we're working on, but even things we have right now, we use Poly as our pricing engine, and Poly now has some AI built into it, and they're going to be rolling out quite a bit more, where it will identify those near misses and say, you could have locked on this program if your LTV was 1% lower, maybe instead of 71, do a 70, and you could do this. Or like you said, completely different program that people didn't consider, non-QM's a huge one, especially when it comes to second homes and investment properties, things that have large loan level price adjustments with the agencies, but people are so used to pricing them with the agencies. And it's like, you got to look at the jumbo and the non-QM investors. Some of these non-QM lenders or even jumbo lenders will actually do loans that are much lower loan amounts. They don't need to be a jumbo in order to utilize them. And so it's things like that, yeah, I think AI will help loan officers identify programs that might be available to them. And one of the drawbacks of having so many products and programs is it's nearly impossible to keep up on all of them. I mean, some really good loan officers obviously read every news break and everything that comes out. And then certainly people specialize in certain niche type products. There's no question. But for the average loan officer out there to be able to find that needle in the haystack, AI will definitely be a tool. We're using it in a small degree. I expect by the end of this year, you'll see it in a pretty significant role in helping to identify programs.
At the end of the day, finding the program is not the value of the loan officer necessarily. And I think that what that's going to do is make us such better consumer advocates in order to, really be able to suss out what's the best product for you and to speak to that, intelligently. I think that's important. But it circles us right back to that conversation that we started on, is that relationship. And there's no AI out there that's going to be able to take the place of a loan officer on the phone with the client, walking them through the process, of the real estate agent telling them these are the steps you're going to go through. You have to have, I know you've bought a lot of houses in your day, right?
Turns out.
Yeah. At what point did you understand the process fully that you didn't need somebody to tell you what was next? Or, it was probably a few, right?
Right.
So somebody that's bought one house and then 20 years later they buy another one, and the system's completely different. They're always going to need people. They're always going to need real estate agents, and they need loan officers to explain to them how to use their money. There's lots of statistics out there that tell you that it's really is kind of the top 1% to 3% of people that are involved in the stock market, investing and things like that. There's more people are average Americans that have a job and buy a house and pay their mortgage, and they have a car, and they go on vacation once every 2 years, and that's great. And so they're not going to understand all the ins and outs of the best way to utilize a mortgage for what it is that they want to accomplish.
Yeah.
Walking them through that is going to be something that human connection is always going to be there. I don't see how it's going away. I mean, I hear robots are coming. I've watched, I've involuntarily watched a lot of YouTube videos about it because my husband, he's into that kind of thing. I'm guessing you probably are too. And so, but I don't think it's ever going to completely take over.
Yeah, I mean, look, I think that not only is the relationships important in order to meet new customers. I mean, there's no question about that. I think that clients, customers like someone that they can reach out to and that can give them a level of comfort about what's happening. And like you said, let them know about the steps that are happening along the way. I think there's some ways you can automate that and leverage technology. I think the younger generation is more comfortable utilizing that technology. So it's really important that you have the technology. But to me, this is like, it's like a marriage between the human relationship and the technology. The technology needs to make it easy to access the information at all hours of the day in a very easy way, in a mobile friendly way. Yep. But nothing's going to completely replace the counsel that's needed from a person, and the confidence and just the reassurance, when you need help with something. And so I think that gives me a lot of confidence that, we're here to stay, although we need to be willing to adapt. Yeah. And we need to be willing to embrace the technology that's available and not be worried that it's going to replace us, but figure out how do we use that to enhance the relationship. And those are loan officers that I think are going to do really well. I'm not worried about it. There's enough. If you use AI enough, as beautiful as it is for so many things, it can be so stupid at other things, you know, and I still can't get it to draw a picture that doesn't have like 6 fingers or something, you know. I mean, it's like, so there's definitely, you know, I mean, it's getting better. Don't get me wrong,
these young kids, you know, at here, one of the things that I think is really cool about our company is that we've got a lot of women leaders at New American Funding, and we've got a lot of millennials that work here. And, you know, these young people are getting out of college and getting to mortgage or getting into real estate, and they bring a totally different approach, right? They're, you know, they got the podcast, and they've got, you know, they're out there and they're having events and parties and different, you know, different ways.
You can be a middle-aged guy and have a podcast, right? I mean.
Yeah. I mean, but they're doing it, you know, to generate business and buzz, right? And Market Shares is a really great podcast for somebody that wants to get into the industry, especially if they want to understand the full scope of it, because you have a lot of unique, you know, you bring the real estate side into your podcast more than a lot of mortgage podcasts do. A lot of them just talk about the mortgage industry. But you know, it's fun to watch young people getting into the industry and seeing what they're doing. And you know, we have to follow their lead, because what they want in their businesses is really what we have to be able to deliver. So, you know, we have in India, New American Funding owns a technology company.
Right.
I don't know any other companies that do. I've talked to people about it, you know, other loan officers at other companies, and nobody's ever said that they have that. And so, I mean, what is that going to manifest into over the course of the next years as technology is really moving fast?
Yeah.
It moved fast, you know, for a while. It moved pretty fast for a while, but I think the next 10 years is going to be mind-blowing.
Oh, yeah. It's accelerating quickly. I think we've made a lot of the right
we have to figure out how we're going to do loans on Mars, apparently.
Well, hey.
Right?
Hey, if that product rolls out, we're getting it.
I know. Would that be fun?
There's no question. Yeah.
Wouldn't that be fun?
I don't want to be one of the first people to Mars, because I don't know if those people are coming back. Chances are probably not. It's probably like a one-way ticket to Mars, I'm thinking, at least for a while.
Yeah. Well, someone's going to go. It'll be interesting to see.
This is quickly going in the direction of a Joe Rogan podcast. We should probably bring it back. No. Well, look, I know that we're both a little bit short on time today, but I think this was a great discussion. I hope that you, as our audience, enjoyed this discussion. Curious, you know, if put down in the comments what your thoughts are on any of the things that we talked about. I will. I always see them. I usually see them. What's funny is I reply to my comments, and I'm never logged into my YouTube under the Market Shares. It's always under me, so under my personal one, because
I'd be interested to see the comments as well on what your audience thinks are going to be the, you know, what are the top 2 or 3 things that are going to be prevalent in the mortgage and real estate industry moving forward. Today we talked about, you know, ASAs. We talked about the dual real estate agent loan officer thing, which I think is not going away. It's a way for people to make more money and focus on productivity coaching. What does the real estate and mortgage industry look like in the future? I'd love to hear what other people think.
Yeah. Well, we know it's going to evolve. There's no question. You know, I don't think it changes completely, but it evolves, and that's okay. So, you guys, thank you for your time and attention in watching Market Shares. Thank you even more for letting people know about Market Shares. Get the word out. And if you're already a subscriber, thank you. If you're not, consider subscribing. It does help our channel. And keep in mind, there will be a new episode every single Friday at 10 a.m. Pacific time. So thank you so much, and we will see you next time. Take care.